Good morning, everybody, and happy Monday. Well, most of you've probably heard over the weekend, the stock market's at an all-time high. And it is. It's been an amazing run. But y'all have heard me say this before. Wall Street isn't so much an investment organization as it is a sales organization. So I went back and I looked at some numbers and I thought, well, where were we about, I don't know, 3 years ago? So I just grabbed November 1st, 2021, and I kind of ran the numbers on the Dow Jones Industrial Average. And even with this epic run, the Dow over the last 3 years is up 18%, almost exactly. All right, that's 6% per year, which is good, not great. I mean, inflation's kind of been there. And of course, that doesn't count fees, and it always counts reinvestment of dividends. Nonetheless, 6% is 6%. But I'll tell you what Walt and I see in here. We have lots of clients who bring in statements from other firms. And they're always saying the same thing. How come if the stock market's at an all-time high, why isn't my portfolio at an all-time high? In fact, I've lost money or I haven't made anything over the last 3 years. Here's the reason, or one of the reasons. Almost nobody is completely in the stock market at all times. In fact, most people have the classic pie chart that most of you have heard me talk about and Walt talk about as well, where, oh no, sir, you can't have all your money in stocks. You've got to have some in bonds. You've got to have some in international, some in real estate investment trusts. You get the idea. But usually it breaks along 60-40 lines, 60% in stocks, 40% in other. So I went back to looked at the other over the last 3 years. Most of the other is comprised of bonds in that 40%. So I looked at those indexes. I thought, okay, where were we on longer term bonds on November 1st, 2021, medium term bonds, 2021, and short term, where would we be? And so long term bonds are down 37% still from 3 years ago. Well, that's minus 12% per year. Let's see, the medium range bonds, the length, the maturity, they're down 16%. And short-term bonds, well, they're basically just tracking with interest rates, 4 or 5% returns. I thought, well, if 40% of your portfolio is down anywhere from 10 to 20%, well, this 6 per year, you're 6% per year on the other 60, you're about treading water, which is what most people are seeing even when the stock market's at all-time highs. So again, this is the Wall Street sales machine. Get you in, get you in. But if you dig down into the numbers and you dig down into what the big guys are doing, they're selling into this. They're getting out. And so they need buyers, thus the sales pitch to you all. Can this market go higher? Sure. Is it worth the final 2, 3, 5% that you might get before an election? Shockingly, we have our doubts. So with that, I will turn it over to Walt and have a great rest of the week.